Hello everyone and welcome to today's cryptocurrencies update for Friday, August 26, 2022. Let's go straight to the charts. No time to waste. Things are tracking along quite nicely, but the bounce might have disappointed a little bit for some of these cryptocurrencies. That can be the nature of bounces. They are often very unpredictable and always expect upside disappointments for bounces. So here we go. Let's see if I can find the link. Bitcoin. I want to also review the very bigger picture for Bitcoin so you get an idea of where exactly are we if this new bull run has started. For now, simply said, this bounce was quite minimal, not even to the 38.2% retrace on Bitcoin. Ethereum, on the other hand, did pretty much what it had to, also at a minimum. But again, this is certainly possible. I'm looking here for potential positive divergence developing. Again, that is a condition. It is not a signal. We need to, of course, see the reversal happening. But this still looks good like an A, a B, and a C. And B was quite disappointing. So we might go down to about 19,000 here for Bitcoin. That wouldn't surprise me. Again, if we go below 17,600, then all we got was a bounce within a subdividing larger downtrend. That remains the line in the sand for all these cryptocurrencies. So, assuming this is a new bull run, this is what we're looking at. So far, nothing has really surprised. We were tracking this diagonal. At some point, we were simply trying to figure out if we got an extended micro 5, yes or no. We didn't. So that's pretty much been the only thing we had to see. Then we got the wave A down, a couple of days of a wave B, and now potential wave C. So if this is a 1-2 setup, then we get 3, 4, and 5, which will then complete one of larger 5. Then we get a large pullback, wave 2, 1, 2, 3, 4, 5. This is the path I'm looking for. This is not accurate in time. This is not accurate in price. This is just to show where we are in the grand scheme of things. So then the June low was wave 4, and all of this needs to be wave 5. And I've even shown the subdivisions of all these waves. This is kind of what we need to expect going forward, as long as the June lows hold. If not, then this whole process will be redone, and all we got here was a overlapping bounce, which was not a leading diagonal. Ethereum, same here. Ethereum reached almost exactly the 38.2% retrace at 1714. Let's see where we got yesterday. Yesterday we got to 1722, off by $7 on $1,700. That is nothing. To the T, lower end of the target zone, looks like we're now going for wave C. If this is the case, expect it to bottom somewhere between 1150 and 1320. That is the anticipation. Now we'll have to see if this is going to really follow up accordingly as a CSA relationship. C waves don't have to be equal to A. They can be longer, can be shorter. Nobody knows beforehand. We'll know soon enough. If we break above yesterday's high, then we need to start considering that the low is already in place and this wave 3C is underway. Here is also a bigger picture review of Ethereum's path going forward, assuming a new bull run. So we're now in green wave C of red wave 2. Then we get 1, 2, 3, 4, 5. This is 3, this is 4, this is 5. A big pullback. This is pretty much the last chance to load up the boat, and then wave 3. Similar to Bitcoin, where I've shown it all the way for wave 5. For Ethereum, I'm only having space for wave 3. I don't want to zoom in or out too much and it becomes illegible. So we're really now fine-tuning this wave 2 here, and then we should start to impulse higher. Again, a break below the June lows at any time going forward means this is not a leading diagonal, but a very leading diagonal lookalike B wave. Okay, the same happened with the stock markets at the end of 2019 into early 2020. It really looked like an impulse, but it was actually the ending diagonal B wave. So the B waves can also be diagonals or have a shape as a diagonal, and you get a very fast collapse. But honestly, so far, nothing out of the ordinary. We were looking for a top here between 1715 and 1835. We got 1722, and we're now slowly moving lower. Nothing too crazy going on just yet. But please note, we're also now below the 50-day moving average at the time of speaking. But again, this is the bigger picture path that I am trying to exemplify using this chart. I hope this is to good use for you, so you have an idea of where we are, especially here for Bitcoin. Have an idea of where we are. Again, it's not accurate in time, not accurate in price. Moving on to the Grayscale Ethereum Trust. Yes, I'm racing through this. I'm a little bit short on time, so you can always rewind these videos. No worries. Looks good here for this ABC. I was looking here for this top here between 1334 and 1382. What did we get yesterday? Yesterday we got as high as 1354. Picture perfect, bingo, nothing out of the ordinary. Very rapid decline today, which is typical for a C wave. The C is A relationship is exemplified by this blue arrow and targets around $9.5, which would close this gap. Okay, so very normal. The typical 2/B target zone was here between $10 and $12. I then narrowed it down to $10 to $11. But if we continue lower with a classic CSA relationship, it doesn't have to be, but a classic CSA relationship, we target 9.5. I see no reversals. Everything starts to look like we're going lower. Potential positive divergence developing on the daily RSI 5, but I'm not going to even pencil it in because I really don't see a reversal at all. So far, nothing out of the ordinary. Tracking this, we knew where the bounce would be. Picture perfect, all right? Call me crazy, but you see how well Elliott Wave works. Then we have Avalanche. And again, Elliott Wave works all the time. It is the interpretation of the Elliottian me that is not always correct because I'm not perfect. But you can really clearly see how well it works when target zones are reached. I cannot do anything about the fact that things do not go to the ideal target zones. Those are simply ideal based on what we expect things to do in normal market circumstances, so to say. This is your expectation. You have to know your unknown, okay? And then you work from there. And if things don't go exactly as planned, then you simply know that that is always possible. Doesn't mean I'm wrong. It's simply that we don't always know exactly the bounce will go to 62%. Nobody can know that beforehand. It can stall at 23.6. So effing what? It just does what it does. Don't play bounces. There we go. For Avalanche, already in the target zone, but can go to about $17. See no reason to change my tune either. BinanceCoin, also here, a slightly disappointing C wave of a B wave. I would have really liked to see it go to 320. That is the preferred retrace target zone, and all we got was about 310. Also here, potential positive divergence forming. See no reason to change my tune. This can go as low as about 250, 240. And then we have a very classic 50 to 62% retrace. Very normal, nothing out of the ordinary for a typical wave 2/B. And then, similar to Ethereum and Bitcoin, as I showed you, we'll get wave 3C underway. Okay, so then we get this wave 3C, similar to Ethereum and Bitcoin, those bigger picture. Please keep that in mind where we then are. Okay, again, this starts to look pretty good here for this expanding leading diagonal wave 1A. Nothing out of the ordinary so far. Can even be that this B wave is subdividing even further. B waves are extremely tricky, but for now I prefer this. If we go at any moment in time back above yesterday's highs, then we have to start to consider either the B wave is subdividing or the larger wave 2/B is already complete. And I mean, if the B wave subdivides, it's the B wave of the wave 2/B. So again, please know where we are. We can still be in green B, or we are in green C. That I don't know yet. I prefer the green C of red 2B. Polygon or MATIC also doing pretty much what I thought it would. It would bounce over the last couple of days. That's what I already said last week, and that's exactly what we got. I would have liked to see 0.9. Well, we got 0.85. Crimea River. This is typical B wave behavior. And I prefer it to look lower to about 75 cents, maybe 60 cents, somewhere around there. Again, if we go above yesterday's high at any given moment in time, either wave 2B has already completed, the red one, or the green wave B is subdividing. to be determined. Those are the only two bullish options that we have left. Again, I like the bullish wave count here. This is, in my humble opinion, a rather loud and clear impulse higher. So the current pullback, as it is unfolding, is doing pretty much exactly as I thought it would, up and now down. So far, the minutest of details is only where it differentiates between what I thought it would do and what it is actually doing. But we're not going to fall over the micro stuff. Then we're going to look at Solana. Solana is also now in the ideal support zone. Below 30.45, we're going to revisit the 25 level, and all this was a B wave, which was hiding quite nicely as a leading diagonal. Again, I'm not as optimistic about Solana and Cardano, for example, as I am on the other cryptocurrencies. But again, we're so far in the target zone as anticipated. RIOT, this is RIOT, where I still think the previous 4 or 5 days were a wave 4, now in wave 5, then we're going to bounce, and then we get a wave C. Can reach about $5.50. Would close this pesky little gap we have here at about $5.80. Mara might be in a slightly different wave count, which is that we completed the bounce and are now in wave C. A standard typical CSA relationship targets about $8.40. That would close also a slight gap that we have and reach the 76.40% retrace. Right now we're at support here at about $11.40, I believe it is, $11.25, somewhere around there. If we break it, then we're going to go to the next support zone and into this ideal green target zone. And the 62 to 76.4% retrace of the entire rally is also very normal, typical behavior for a wave 2/B here in red. Nothing out of the ordinary. We can even get an 88.6% retrace. That would be quite extreme, but normally second waves bottom between 50 to 62%. So far, nothing out of the ordinary. You can see the wave count is slightly different than that from RIOT. I've been flip-flopping back and forth. It is a matter of interpretation. How do you interpret this one single day? That's pretty much all where it boils down to. And I think it is maybe better to keep the original wave count for Mara and let this one do its own thing versus RIOT. They do not have to be aligned. Again, I'm sorry if I flip-flop back and forth, but we have to try to fine-tune this as good as possible. But with this wave count, I think it fits quite nicely with the 1, 2, 3, 4, 5 based on closing prices. And then we had about 23.6% retrace of the entire decline, quite minimal, because here in thick green is what a typical B wave, I'm saying typical, right? This is what you expect, between 38.2 to 62.8% retrace. Well, we only got 23.6. It happens. I can show you plenty of bounces in the crypto world that really failed to even reach the 38.2% retrace as well. It happens. We simply know we're going to get a bounce. And this, I think, is a nice solution for the current wave count. And I'll stick to it. So below 11.25 targets around $9, and we can target 8.40 for a classic CSA relationship. All right, so that is all I have for today. If I went too fast, you can put it on slow, or you can, let's see here, read the summary slide. Is the bounce already over? Well, these are the targets I was looking for. So far, so good. Ethereum's Grayscale Trust does suggest the bounce is already over, as it really topped exactly where it had to. Ethereum, I said below 1580 can target 1280, 1320. And I've showed you the bigger picture wave counts where I outline in more detail where we currently are, so you get a good idea if this new bull run has started, what to expect going forward over the next weeks to months. Okay, this is not something that's going to already materialize tomorrow. This is going to take its sweet time. This is going to take weeks to months before we even get this 1, 2, 3, 4, 5, the initial 5-wave setup. Again, there's still too little evidence to tell us that this new bull run is the case. I really need to see those 5 larger waves up. And we only have 1 of 5, and now most likely working on 2 of 5. So really early stages still in this potential new bull market. So that's why I continue to say we need to hold the June lows, because we are still so early stages. We hold the June lows, we're fine, we move above the recent highs, even better, then we start to look for this third wave, fourth, and a fifth wave. That's still my preferred anticipation. We're reaching the downside target zones as we're starting to break down. We'll have to track it. So far, nothing too much out of the ordinary, other than that some of these bounces did not go as high as they ideally, technically, picture perfectly should go. But then again, those are bounces, and bounces are the most unpredictable of all price actions, because you're dealing with a correction within a correction. And that's very, very tricky. So thank you so much for listening. Take care, trade safe, and see you all on Monday.